Okay, in terms of their profit, I think, okay, we have 1122 crores, so that's actually better than what we were expecting. Our expectation was just at just about 1,000 odd crores mark. So this has definitely overshot our expectations by about 100 odd crores. So 1122 on the bottom line is a good number. In terms of their total income, I think it has come in at 6,432 odd crores. Yes, so that too is a beat compared to the number which we were expecting, which was about 6,100. They do have an other income component as well, which is about 340 odd crores, which on a Y-on-Y basis compares to just about 267, 268 crores. So there is a bit of an other income boost as well. And let me just wait for the operational numbers. But Sonia, first take on the two key numbers that we have.
Well, the bottom line number looks good. So if it is 1122 crores, then that's a good growth that we're seeing compared to the 933 crores that they've done last time around. That would be about a 20% growth on the bottom line. But you know, on the top line number, I just want to mention that we need to now start removing the excise duty component from the top line number, and then you'll sort of get the margin number as well this time around. So on the bottom line, looks good, 20% growth. As I said, the income has come in at 6432 crores.
Yeah.
So what is the versus figure for the income, Sumera?
Yeah, just give me a second, I'll get it for you.
Okay, so while we wait for that, let's also get Pranoy Kurian.
The comparable is 6407.
Okay, so that
has been also restated, I think.
It's been restated. So that's a very important observation. So if it has been restated, the numbers, we should put the fact that the top line has not grown at all. It's absolutely flat, in line with what the street was estimating. So we need to put out the fact that the total income, see, the poll is not comparable anymore because now they add the excise duty. So we should remove the poll and we should put the fact that the top line is absolutely flat. It's just up about 0.4%, and that means that in line with what the street was estimating, no beat on the top line. The net profits, can you give me the, is it 1,052 crores, the versus figure for profits?
Yeah, it's 1,052 crores.
Okay, so 1,052 crores is just a 6% growth on the bottom line. So these are in-line set of numbers, at least on the top line and on the bottom line. There's no beat, flat revenue growth, and the bottom line is up just 6% versus an expectation of a 9.5% growth that the street had. And it's the other income that has boosted the numbers this time around. So no surprise coming in, at least as far as the top line and the bottom line are concerned. Now, as I mentioned, what we need to do this time is to remove the excise duty in order to calculate the margins.
I think excise duty is about 377 crores, around about 378 crores.
Okay, so 378 crores as far as the excise duty is concerned. So while we do calculate the margins, let's go across to Pranoy Kurian of IDBI Capital, who's also with us. Pranoy, hi, welcome to our show. We're just getting the numbers coming in from Bajaj Auto, and you know, on the top line and the bottom line, it seems like an absolute flat performance in line with estimates. Top line is up just 0.4%, not grown at all. The bottom line is up just 6% versus an expectation of a 9% jump. While we calculate the margins, what would your initial comment be on the top line and bottom line?
So I think the top line would be a positive surprise actually, because volumes were down 2%. We already knew that, 2.3%. But realizations being flat, or if the revenue declined only 1%, then that means there's some positive movement in realizations, which would have been a surprise given that the mix was far weaker this quarter, lower share of exports, lower share of three-wheelers. So on the top line, that's a positive. On the profitability front, I think the market was expecting a jump of around 10 to 12%, mainly on the back of other income because of the new accounting standards. So that has fallen, so we'll have to see at least whether the margins were lower than expected.
What were you forecasting in terms of margins this time around?
20.6%, so an EBITDA of 12.2 billion, so around 1221 crores.
Okay, so 1221 crores, they've come in at 1294 crores. So what I've done this time is I have removed the excise duty from the number, and if you calculate that, the margins have come in at 21.3%. So 21.3% is not bad at all, and 1294 crores is the absolute EBITDA number that we've got. So we should flash that on the screen. 1294 crores is the absolute EBITDA number, stripped of excise duty, and 21.3% is the margin. So that's not bad, right, Pranoy?
Actually, that's positive. And what's happening is actually across the sector, there are strong margin beats we've seen. And I think mainly it's due to the strong operating leverage. So I think other expenses and staff costs must have been lower as a share of sales, if I had to guess. And I think we've got to remember this quarter has the favorable base effect of Diwali being earlier. So there's a lot of high wholesale growth, sales to dealers, whereas the retail growth is actually lower. So it's been a positive quarter, but there's a strong base effect. So this is likely to reverse in Q3.
Okay, so just to give the numbers to our viewers who have joined in late, Bajaj Auto's top line is flat. The margin performance is flat on a year-on-year basis because 21.3% compares to 21.5% on a year-on-year basis. Remember, all numbers for companies in the auto sector have now been restated because of the new accounting norms, and the profitability for the company is also flat. At best, you can say that there's no negative surprise in the numbers, which is a good thing because Bajaj Auto's exports have been suffering a lot, but that has been compensated by the improvement that we've seen in the domestic market. So they've managed to hold on to 21.3% margins despite the top line not growing at all. Prakash Diwan also joins in. Prakash, how would you read into these numbers?
So very clearly what seems to have supported the Hero MotoCorp numbers, especially the margin improvement and the margins have peaked out, seems to be an industry-wide trend. And Bajaj also has been helped by the fact that they had very limited A&P costs this particular quarter. There's not really much of campaigning that they've done. And what seems to be now working for them is that, the demand pickup probably takes away the competitive intensity which was earlier felt till the April-June quarter. So I think more or less, you're seeing a situation of comfort which very clearly the numbers at least depict. And going forward, they'll continue to ride on this operating leverage. And my expectation is Hero is far more ahead of Bajaj because of the domestic and road and all. But Bajaj also hasn't been disappointed by any upsets on the export market front. So all in all, much better than what I had thought of. I was expecting slight weakness, but they've probably managed to scrape through with a decent set of numbers.
But that's the thing, right, Prakash? They are just managing to scrape through while other companies like TVS Motor and Hero MotoCorp are reporting good quarters or reporting a beat quarter after quarter. Do you think that here on there's a chance that Bajaj Auto could underperform Hero MotoCorp purely because of the struggle that they're seeing in the export market?
Yes, so the export thing has, of course, what's happened is last year when exports started struggling, and particularly the markets where the currency devaluation also has been hitting them badly, realizations weakened because of that, especially Africa and the sub-Saharan market. They have taken a huge focus itself. They wanted to be an export-oriented company till early 2015. Now they are actually looking at the domestic market. So naturally you are competing against the Heroes and the Hondas and the what has happened on the TVS numbers front, Sonia, we discussed that briefly yesterday, that they've started seeing market share gains. So that is where, Bajaj is sleeping. It is at the cost of Bajaj, as I was mentioning. And Bajaj will have to, do something very, very dramatically different to kind of come back with a bounce if they have to be in the top two. So very clearly, they are not yet out of that zone, and they will continue to struggle, and they could underperform. There's no doubt about that.
Okay, Prakash, we leave it at that. We have you on a scratchy line as well, so we'll let you go on that note. Also, some more details coming in from the management. They say that their domestic market share has improved by 130 basis points this quarter around, and that's purely because of their new launches, the CT100 and the Platina in the 100cc segment. Over there, their market share is stable at 35%, similar to what they saw in the last quarter. But the sales of the new V15 are also doing well. So they've sold over 61,000 units in Q2 of FY17 of the V15, which is very good. The run rate has improved compared to last quarter. So the sum and substance is that these numbers just about meet the street estimates. There's no positive surprise in the numbers at all. The revenue growth is very tepid because of the fall that they have seen in the export market. So hardly a growth of 0.4%. The bottom line growth is 6%. That's also because it's boosted by other income, and the margins are absolutely flat. So no growth in margins, but that's something that I guess the street was expecting. Let me just get one quick word in from Pranoy as well. Pranoy, now that all three two-wheeler companies have reported numbers, what would your pecking order be?
Well, it would probably be Hero first, then Bajaj, then TVS, primarily based on valuations. With regards to Bajaj, while it has a strong brand and the R&D capabilities are impressive, we believe that there will be several demand challenges in the long term. One, this shift to scooters away from motorcycles is here to stay. It's in line with historical trends as well as in Asia. And, as the share of women in the workplace increase and there's more urbanization, we believe this trend will continue, which will impact a pure motorcycle player like Bajaj. Secondly, we feel three-wheel as a segment, it holds an uncertain future, especially in emerging markets as well as India, with the rise of these low-cost taxi aggregators and higher labor costs, making the entire proposition not as viable as before. So I think that's our outlook on Bajaj and two-wheelers.
All right, Pranoy, thanks a lot for that. So there were some more comments coming in from Bajaj Auto. By the way, the stock has started to correct as well, because as I said, the numbers are muted in line with expectations. There's no positive surprise in this quarter's numbers. The margins at best are flat or slightly lower, in fact, 21.3 versus 21.5%. So largely flat, and it's the higher other income that has boosted the profitability. So there's nothing in these numbers for the stock to move up higher. At best, you can say that there's no negative surprise, which was the fear with Bajaj Auto, as exports have been suffering a lot.
All right, Sonia, thanks very much for that. That's the analysis on Bajaj Auto. On all counts, it's in line with what we were expecting, but as expected, nothing spectacular. But nevertheless, I guess sometimes, not so spectacular is still not so bad.